What is going on, everyone? Welcome back to the channel. This video is on whether or not the dollar has peaked, or are we going to see a continued rally to the upside. Starting on Friday and this weekend, we do have an event called the Jackson Hole Symposium, where Fed Chairman Jerome Powell has the opportunity to rewrite market expectations. As we know, all markets, especially dollar, obviously the king of the castle, moves on the expectation of what the Federal Reserve are possibly going to do. Now, he obviously is speaking and testifying at the event. We understand what he says goes. So it is going to be a crucial indicator to see whether or not he forward guides what is going to happen and how he sees the future playing out. As it currently stands, the interest rate is set at 2.5% in America. So it is crucial to see, okay, we know that they're expecting inflation to be around 2.5% to 3% within the next 12 to 18 months. We understand that the current Euro-dollar futures market prices interest rates at around 3.5% to 4% in the next 12 months. That leaves us with a gap of 100 to 150 basis points left in interest rate hikes from now to around next year, May, June 2023. So we now need to ask ourselves, are the Fed going to continue at this aggressive pace, raising by 50, 75 all the time? No. Are they going to pivot? I don't think so. However, will they slow down? Highly likely. The chances are highly likely that the Federal Reserve are going to be slowing down in the coming months. Our job is now to figure out when that's going to be, right? Use this opportunity because this is such a vital event. The fact that it carries on over the weekend is going to give the whole market an opportunity, because come Sunday night, 10 p.m., there's going to be massive gaps across the board depending on what happens at the event. So just remember, this is the opportunity for Fed Chair Jerome Powell to rewrite market expectations and to fix what has been priced in currently for the dollar. So let's jump straight into dollar and go from there. Right, dollar right now, this is on a 30-minute actually. I took a trade on both euro and cable today, long positions, as I expected a bit of a reversal on the lower time frames. However, let's fix ourselves on the daily and just realize that price is extremely bullish. And price has been on this massive bullish run for months due to the overall expectations of what the Federal Reserve are going to be doing. We understand this is the most aggressive rate hike path the Federal Reserve have ever done in history. The most aggressive monetary policy tightening ever. Reason why the dollar is where it is. Am I a dollar bear all of a sudden? No. But do I understand that trading on a daily basis requires us to know where the dollar is, more importantly, where it's positioned to go. So looking at this right now, I need to understand on the weekly time frame and say, fine, although price is extremely bullish, I know where we are. I know in the past, this level of 109 and 110 has acted, as you can see over on the left, has acted as a massive level in the past. Do I expect a bit of turbulence at this price? Yes. Is there anything stopping dollar from continuing its rally? No. With so much geopolitical uncertainty and so much geopolitical tensions, with a global inflation problem and narrative, do I still see cash being king? Dollar being king? More than likely. So I'm not saying that I'm going to be selling dollar, this is the top. I am, however, saying ahead of what's actually happening right now, I do possibly expect this to be an interim high, right? I do expect some sort of correction because we've had this massive rally of around 4.5% from last week's low to this week's high. So massive rally. And there again, I'm shooting this video on the 24th of August, Wednesday, middle of the week. I understand there are midweek reversals, but leading up to the event, Fed Chair Jerome Powell has the chance to rewrite. So this video is just to let you know that we may be in a short-term high, right, with the conditions that Fed Chair Jerome Powell accepts that, yes, you know, they have been raising rates aggressively, labor market is still tight, inflation may have slightly or temporarily peaked, we may start looking at cooling ourselves down. My only concern now is how long for? How long for? So looking at this right now, I'm still with the understanding and the probability that dollar may head higher. Dollar may continue its rally higher. Why? This is a global problem, right? It's a global narrative. We are possibly heading into one of the biggest recessions ever seen. Do I think it's going to be a short-lived one? Possibly, because I do expect central banks to step back in and start easing within the next 18 months. That's my sort of prediction. However, with dollar where it is right now, I do need to understand and say, fine, I expect this to possibly be a short-term high. What does this allow me to do? This allows me to trade the inverse. So it allows me to use my Fibonacci, especially on Euro, on Cable. Cable was my favorite one. We had this area of liquidity, right? Area of interest on a 30-minute time frame. And this obviously gives us the opportunity. I'll actually put a screenshot here of my before trade. And this gives us the opportunity to get in. It's extremely laggy. There we go. This gives us the opportunity to then capitalize on areas of interest if we do expect an interim high. So I want everyone to think about that for a second. Leading up to the event, we'll go back to the dollar. Leading up to the event, if the market does present itself with exhaustive opportunities in the dollar, we want to capitalize on that. So to summarize this video ahead of this Friday, continuing into this weekend's Jackson Hole event, Fed Chair Jerome Powell is going to have the opportunity to rewrite expectations. He's going to be dovish, which means negative, means not so optimistic on the future going forward. Is he going to be hawkish, more optimistic, more aggressive with the rate hikes, very enthusiastic on the economy going forward? Or is he going to be neutral, which is technically his job? He's not supposed to choose sides, but state the facts. Central bank leaders and chair people are supposed to comment on the facts. They have something called the reaction function. Several years ago, especially after 2008, the Fed stopped forward guidance because they couldn't really predict such crashes. However, now they abide more by something called the reaction function, whereby they simply react to something and after something has happened. So right now, this event is probably one of the biggest events of the year. So it's important to understand this. Is he dovish? Is he hawkish? Or is he neutral? And how is that going to affect the dollar? Do stay tuned on the channel. I am going to bring you an update on this event because it is so important. But for now, I just wanted you to know that and get you prepared for what's to come. Stay tuned on the channel. Like, comment, share, subscribe. Do what you got to do. Follow me on Instagram. I'll put my Instagram somewhere here. Send me a message. And yeah, let's kill it together. Now is such an important time to understand the fundamentals and actually understand why things move the way they do. Stay tuned on the channel. So much more to come. See you guys soon. Take care. Bye-bye.